Do you really understand the difference between the general ledger and the trial balance? The distinction is more than just technical know-how. It's the key to creating accurate reports and maintaining flawless records, and most importantly, responding to management inquiries. I'm going to examine these crucial tools and explain their unique roles and give you some insights you might need to run a more efficient and effective accounting and accounts payable function while taking your accounting and financial expertise to the next level. So let's dive right in and let's get started with a few definitions to make sure we're all on the same page. What is the general ledger? The general ledger is a set of all accounts that show the transactions within a company or an organization. It's a record of all the financial activity within the business. This information is grouped to show individual accounts that will record assets, which are the resources with economic value that can add benefit to the company in the future. Liability, these are the transactions, sales or exchange liabilities. These are past transactions, sales or exchanges of assets that are currently unpaid and provide economic benefits for the future. This most importantly includes accounts payable. Revenue, the total amount of income made from the sale of goods or services, and expenses. This is the cost a company incurs to operate a business and generate revenue. Your salary and benefits, i.e. payroll, is part of this figure. Gains, this is an increase in the company's overall income that comes from something other than the normal business operations. So for example, if the company sold the corporate plane, this might be included here, assuming they sold it at a profit. Losses, this is a decrease in the company's overall income that comes from something other than its normal business operations and activity. And equity, this is the difference between the liabilities and the assets on the company's balance sheet. Now, let's take a look at the trial balance. What is the trial balance? The trial balance is a report that shows the ending balance in each general ledger account. In an ideal situation, the total credits and debits match, and they have a balance of zero. Debits are the amounts of money a company brings in, and credits are the amount the company spent. This trial balance helps to create an accurate financial statement. This is an internal document used for accounting and auditing. You'll never see a company's trial balance the way you'll see their income statement, balance sheet, etc. There might be several or more functional trial balances, such as the accounts payable trial balance, which roll up into other trial balances. There are three types of trial balances. They are the unadjusted trial balance, which is the listing of the general ledger accounts balances at the end of a reporting period. The adjusted trial balance, this is the internal document that summarizes the current balances of each of the general ledger. And the post-closing trial balance. This is the final trial balance that's prepared before the new accounting period starts. Now that you can understand them both, let's compare them and see where each comes into play when running an efficient and effective accounting operation. So what's the difference? While both the general ledger and the trial balance have their places, they are not interchangeable. Let's look at some of the ways that they are different. Though both the general ledger and the trial balance reference both expenses and income for the company, they differ in many ways. Let's take a look at them. First of all, the quantity of information. The general ledger is much more detailed than the trial balance. It contains every transaction in all the individual accounts, such as assets, equity, etc. In contrast, the trial balance is much shorter as it contains just the totals in each category. The type of data. In the general ledger, there's a list of every transaction from every account for the entire period. You want to think about it kind of like a database of all the financial activity. You can reference this database to get more specific details about any of the transactions. The trial balance is a report rather than a repository for all the data, and it takes everything in the general ledger and condenses it to give you just the important facts and figures to help you see if your account's balance, but it kind of doesn't give you like the line item detail, if you will. Okay, how the data is used. Professionals who are auditing and running a company use both the general ledger and the trial balance. The general ledger is the primary source of information for people in the accounting department, including accounts payable. You can look at it, you can use it to look back at the detailed information for every purchase and sale. So for example, auditors might use it for this purpose to trace balances back to the individual transaction. An accountant uses the trial balance less frequently. It shows the mathematical accuracy of the ledger. This may have been more important in the days before computers and automatic calculations, but it's still important to check for errors in many organizations. And many best practice accounts payable groups, for example, produce the trial ledger. The trial balance basically every month or every quarter, every period, and they, balance it. Auditors request a copy of the trial balance for their year-end reports, and investors may use this document to decide if they want to buy shares in a certain company. Certain departments will run trial balances when they are trying to close the books. They'll review the data and make the appropriate changes. It helps them reconcile the accounts. This is especially true in the accounts payable department. Another way that they're different is the time period covered by the data. Accountants can prepare the general ledger at any time during the year. Some let it run for the fiscal year and others follow a calendar schedule. Both run for 12 months, but the calendar year obviously always starts in January, while the fiscal year may start in another month. The trial balance shows the totals for the reporting period. While it's most common to run this on the last day of the fiscal year, accountants sometimes run it monthly or quarterly or even semi-annually if they're trying to, get a handle on information. Number 6 way that they're different, the account classification. Some use in one case you use account classifications, and another you use totals. Accountants organize the entries or the postings in the general ledger by the class of accounts. This is also, by the way, where your proverbial chart of accounts may come into play. Depending on what transactions you're working with, you must put it in the right column so that the numbers match and the account's balance. The trial balance doesn't have this kind of classifications because you're just using the totals. The only thing to check with that document is that you matched correct numbers with the correct heading. And and lastly, what the reports are used for is also one of the crucial differences. The general ledger is helpful when conducting financial analysis. You can look at the data within that general ledger and draw some conclusions about spending patterns and other fiscal activity for your organization, so it can help you with your analysis. This is impossible with the trial balance because it contains minimal information. You can make comparisons among different categories within the documents, but not for much of an analysis. Both the general ledger and the trial balance, though, play an important role in running an effective and efficient accounting or accounts payable function. You may have noticed that we've referred several times to the chart of account. If you're not 100% sure about how the chart of account fits in, you should click on the link that has appeared on your YouTube screen and is in the description. It will take you to a brief description as well as address common misconceptions about the chart of accounts and common misconceptions that everyone needs to avoid. Good luck.